8. Group plan specifics. According to a 2005 StatsCan survey, 44 almost 75% of Canadian workplaces offer their employees some form of non-wage benefits, primarily through group insurance plans. Since many of those group plans offer benefits to the families of the workers as well, millions of Canadians are covered by group benefits of one form and another, life insurance and extended health insurance being the primary benefits, with disability insurance an equally important factor. As such, group insurance coverage is an integral part of the insurance protection program for many Canadians. Previous chapters in this manual have already outlined, in context, the role that group accident and sickness (ANS) benefits play in providing extended health, disability, and other personal coverage for workers and members of association groups. But it is also important for a life insurance agent to have a basic understanding of how group insurance works from an operational and administrative perspective. It is the purpose of this chapter to outline the rudiments of Group ANS insurance pricing and the role that both the insurance company and the agent play in the placement and operation of a group plan. 45. 8.1 Understanding the group. Unlike the situation with individual insurance, the group member is automatically covered upon joining the plan provided he is actively at work. Absent specific health data on the plan members, the pricing actuaries at the insurance company must rely on general actuarial statistics and previous claims experience for the group, where available. It is important, then, for the insurance company to have a sense of black small square the makeup of the group, black small square the nature of the business, black small square comparative businesses. Part of the information required on the members and the group itself is provided by the employee data sheet, also addressed in this section. 44. Statistics Canada. Section 4 Compensation Practices. Online. Revised September 21, 2009. 8.1.1 Makeup of the group. Group underwriting starts with an understanding of the character and makeup of the group in question. Since the group members generally are not medically or financially underwritten, as they are with individual insurance policies, it is the composite identity of the group members that is used to determine coverage and set premiums. In addition to dealing with factors such as the number of members and their average age and gender, that composite identity also relies on the stability of the group, turnover rate. 8.1.1.1 Number of members. The number of members in a given group of insureds has an impact on the ability of the insurance company to estimate future claims and, therefore, to effectively price premiums. In the case of a relatively small group, 25 lives or less for example, the law of large numbers doesn't work, claims experience of that group cannot be counted on to resemble actuarial norms and, as such, historical experience has little validity. As such, smaller groups may face higher premium rates. Often, the experience of smaller groups is pooled with the experience of similar small groups for pricing purposes. With large groups, with perhaps thousands of members, risk is spread over a much wider range and claims experience in areas like disability claims is much more likely to replicate both past experience and actuarial assumptions. And more certainty can translate into more accurate premium rates. 8.1.1.2 Age/gender. As has been discussed several times throughout this manual, both age and gender can be risk factors for different types of claims, especially disability and long-term care. A primarily female membership is likely to file more health and disability claims than a primarily male group. Groups with predominantly older members are more likely to file drug and long-term care claims than are groups with younger members. As such, the age/gender makeup of the group can influence the types and flexibility of benefits offered and the pricing of those benefits. 8.1.1.3 Turnover rate. It is important for the insurer to be able to know not only the makeup of the group today, but the makeup for the foreseeable future, a month, 6 months, a year into the future, etc. Underwriting, claims experience and premium projections will not be accurate unless it can be assumed that the group will continue to be made up of essentially the same members as at present. One of the most effective means of estimating future makeup is turnover rate, the percentage of the group members that is likely to leave the group and be replaced by others on a year-by-year basis. Historical turnover rate, like historical claims experience, can often be an accurate predictor of future turnover rates. Groups that have demonstrated low turnover rates, 5 to 10% per annum, offer an element of consistency that makes them much more attractive to insurance companies. Low turnover rates mean that past claims experience will be more credible. See Premium Rates section below, allowing the insurer to largely base premiums on past claims experience. Higher turnover rates diminish the value of past claims experience. Past claims mean few if any of the past group members will belong to the group in the future. For that reason, high turnover rates will result in higher group premiums and longer waiting periods for such benefits as disability and long-term care. 8.1.2 Nature of the business. In the case of employer/employee groups, especially, the type of business engaged in will be a significant factor in determining the level of benefits offered and premium pricing under the group plan. Generally, a construction business that requires hands-on activity by its employees will obviously expose members to greater physical risks than a firm with little on-site exposure. And yet, some white-collar occupations may be subject to longer hours and more work-related stress than others, leading to the risk of more claims. Traditionally, some classifications of occupation, like architects, have very low disability claims rates compared to other occupations, primarily, one could assume, because of a low physical risk work environment. 8.1.3 Comparative businesses. Particularly in the case of smaller groups and/or groups who are applying for group insurance for the first time, where claims experience statistics may be unreliable or non-existent, insurance companies will look to their, or the industry's, experience with groups in the same or a comparative line of business, forestry workers, for example, to estimate future claims and thereby establish benefit types and levels offered and premium rates. 8.1.4 Employee Data Sheet. When a prospective group plan member completes an enrollment card and the employer completes the employee census report, the insurance company is provided with a wide variety of information from all of the prospective group members which it uses to determine claims projections and costing for the plan. Specifically, some of the important information provided through the employee census report includes Accident and Sickness Insurance Chapter 8, Group Plan Specifics 194. Date of birth, used to determine eligibility for certain benefits. For example, long-term disability benefits typically terminate at age 65. Also helpful in determining the overall age mix of the group members, for Manual Rating 46 of benefits like disability and long-term care, where the incidence of claims can, in part, be linked to age. Gender. As with age, the gender mix of the group could be a significant factor in pricing such benefits as disability income replacement. Occupation/occupational class. The plan may have different benefit packages for different classifications of employees, for example executives versus factory workers. In such cases, it is critical to know the occupational classification of a plan member in order to determine the benefits that he can qualify for. List of dependents, required if the group plan offers either standard or optional coverage which includes the plan member's spouse and children. Social insurance number, required for reporting purposes if premiums or benefits are taxable to the group member. Salary/earnings, used to determine benefits for disability income replacement coverage. For larger groups, more than 25 members, there may be more than one class of employee, with each class qualifying for a different level of benefits. Either job title or salary level may be used to determine into which class a given employee falls. 8.2 Products and Services. Group products have been covered in some detail in previous chapters, but the following provides a brief recap of the main coverages offered. Black small square disability income replacement insurance. White small square short-term disability, STD. White small square long-term disability, LTD. Black small square extended health benefits. White small square prescription drug plans. White small square vision care. White small square dental. White small square accidental death and dismemberment, AD&D. Black small square critical illness, some group plans only. Black small square long-term care, less common than other coverages. In addition to the above, which are also available through individual policies, as are many forms of ANS business insurance coverage, like disability business expense overhead coverage, group plans may also offer employee assistance plans, EAPs, a benefit not available from individual contracts. 8.2.1 Elements of an employee assistance plan, EAP. A part of the overall package of group benefits offered to employees, many employer/employee group plans offer an EAP, designed to offer counseling services outside the more traditional health care benefits like dental, vision care, prescription drugs, and other extended health services. In part, as with other group benefits, the addition of an EAP to group benefits is designed to help to attract and retain good employees through a comprehensive overall compensation package. The addition of EAP benefits is also an acknowledgement that employees may have personal or work-related stresses in their lives that may impact negatively on their ability to do their jobs efficiently and accurately. EAP services are designed to assist employees to overcome, or at least cope with, these personal challenges. Additionally, EAP benefits can serve as a positive alternative to traditional forms of sanction for employees who have drug, alcohol, or other problems, for example. While some employers may provide on-site EAP counseling services through in-house staff, most provide the support through off-site, third-party providers, to reduce costs and to reinforce the fact that the employee's use of the program is kept strictly confidential. The benefits provided are typically in the form of consultation, by telephone or face-to-face, with a professional counselor. Use of the services provided is solely at the discretion of the group plan member. The services provided are typically subject to annual deductibles, a co-insurance provision, a maximum number of hours of services per annum, and a maximum allowable hourly rate. Example: Sasha Ray works for a large medical supply company that is in fierce competition with another major supplier. Market forces are putting a lot of financial pressure on her company, and the senior executives are in turn putting a lot of pressure on their employees. As a consequence, Sasha Ray is suffering from stress-induced stomach complaints, headaches, and minor depression. Fortunately, her company has an excellent group benefits plan with an EAP. Through this program, Sasha Ray is entitled to up to 10 hours of counseling with a psychologist to help her develop coping strategies to deal with the pressure and avoid having to submit a stress-related disability claim. The following provides a brief summary of the types of counseling and other services typically provided to employees and, often, members of their immediate family, under an EAP. Psychological counseling may be provided on a crisis management basis, via a 24-hour emergency hotline, and/or through face-to-face sessions with a qualified psychologist. The services are designed to assist the employee to cope with a wide variety of factors, from work-related stress to psychological disorders. Addiction counseling provides limited professional counseling services from an accredited drug or alcohol rehabilitation center. Marriage counseling assists the employee in coping with marital stress arising from such issues as infidelity, incompatibility, or financial difficulties, and/or to assist couples to work out difficulties within their marriage. Black small square legal counseling. Many EAP programs also offer employees access to prepaid legal services for such matters as divorce, wills and powers of attorney, POA, adoption, debt problems, and indictable offenses. Although statistics tend to be somewhat inconclusive, it is felt that the benefits to an employer from an EAP, in reduced sick days, absenteeism, and increased productivity by employees, outweigh the costs of the program. EAP premiums are based on the experience rating of the group, see below. Premiums paid by an employer for EAP benefits are tax-deductible by the employer. Benefits are not a taxable benefit to the recipient employee for counseling services relating to black small square physical or mental health of the employee or an individual related to the employee. Black small square retirement or other financial counseling. Black small square employment placement for a terminated employee. Benefits for counseling for legal or financial matters are generally treated as a taxable benefit. 47. 8.2.2 Group Insurers Services. Aside, of course, from providing insurance coverage for the group benefits offered under the group plan, the insurer typically also provides a number of ancillary administrative services, like Black Small Square Plan Member Enrollment, Black Small Square Premium Billing, Black Small Square Claims Adjudication. 8.2.2.1 Plan Member Enrollment. It is the responsibility of the employer sponsoring an employee group plan to enroll the individual employees in the group plan. In larger organizations, this task would normally be handled by the Human Resources Department. The process is, however, usually more than simply getting the employees to complete an enrollment form. Typically, a prospective member's enrollment in the group plan will be subject to a qualification, waiting period between the time he joins the sponsoring company and the time he is allowed to join the group plan. This period is often 3 months, to coincide with a new employee's probationary period with the employer. If the plan was totally non-contributory and had nothing but fixed, predetermined benefits, completion of enrollment cards provided by the insurer might be the sum total of the process. Since the coverage would be cost-free to the employees, enrollment would be mandatory and all benefits and costs would be equal. However, most group plans are contributory and, in the case of groups of more than a few potential members, 100% participation is not a requirement, although some predetermined percentage of the employees must sign up before the plan can be put into place. Since the employees are not specifically required to join the group plan, and the benefits elected may vary from employee to employee, particularly in the case of flexible benefit, cafeteria, plans, there is a need to actively solicit participation in the plan. Regardless of when a new employee qualifies to join a group plan that has optional participation, either upon date of employment or after expiry of a qualification period, it is not unusual to offer the employee a limited period, perhaps 30 or 60 days, during which the decision to join may be exercised. This gives the employee reasonable time in which to make the decision, but does not leave the option open-ended indefinitely. And if the employee/plan member has the option to add additional coverage, over and above the base coverage, for himself or his family members, there may be a requirement for medical, or other, underwriting proof of insurability. In such cases, the expertise of the agent, and/or an account executive from the insurer, is necessary to explain the options and benefits to the prospective plan member and to assist the members in the enrollment process. 8.2.2.2 Premium Billing. The group insurer sets the premium for each group and advises the group sponsor accordingly. In the case of a non-contributory employer/employee plan, where the employer pays for all the premiums, the process is straightforward. The insurer bills the employer one amount monthly that the employer is then required to remit to the insurer. In the case of a contributory plan, where the group members are required to pay at least some of the premiums, premium billing is a two-step process. As with the non-contributory plan, the insurer bills the employer an amount monthly that represents the employer's portion of the premium, and that employer is then required to remit to the insurer. The insurer also advises the employer of the contributory portion of the premium allocated to each plan member. The employer is then required to payroll deduct the requisite premium from each member and remit one payment for the total to the insurer. 8.2.2.3 Claims Adjudication. The primary administrative function provided by the insurance company, whether for an insured or administrative services only plan, is the adjudication of group claims. This involves a series of steps, from review of the claim form to denial or payment of the claim. The first step is to compare the claim form to the terms of the contract, to determine if the event being claimed for is covered under the contract. If not, the claim is summarily declined. If so, the next step is to assess whether or not a benefit is payable and, if so, how much and to whom. This may require additional evidence from the claimant and/or other parties regarding the nature and severity of the event giving rise to the claim. If the claim is approved, it is the responsibility of the insurer to make appropriate payment, either in a lump sum or on a periodic basis, as the case may be. In the case where periodic payments are required, as with most disability and long-term care claims, it would also be the responsibility of the insurer to ensure that the payout does not exceed the maximum allowable under the contract and to monitor the ongoing claim to ensure that the claimant continues to qualify for benefits, for example, that he continues to meet the definition of disabled under the terms of the contract. 8.2.3 Group Brokerage Services. The role of a group broker, usually operating as part of a general agency, GA, is primarily to solicit group quotes on behalf of his clients. The broker gathers the necessary data regarding the makeup of the group and past claims experience from the existing group plan administrator, under exclusive mandate from the group plan sponsor. The broker then confers with the sponsor to determine which benefits and their characteristics within the current group plan are negotiable and which are non-negotiable. Armed with this information, the broker may approach several group providers with a request for a quote, RFQ. Part of the value-added service of the broker is his familiarity with the marketplace, knowing which providers are targeting which type of group, particularly if they are seeking a number of groups within a given business/occupational sector so as to be able to pool their combined claims experience in order to more accurately set premium rates. Once quotes have been submitted, it is the role of the broker to sift through the submissions to select those which most closely meet the client's requirements for both price and plan design. The broker will then meet with the client to present the quotes and make his recommendation. Assuming that one of the quotes is selected, it is then the group broker's responsibility to act as liaison between the client and the account executive with the insurance company in question. 8.3 Coverage. There could be many reasons for a group sponsor of an existing plan to want to shop the market at renewal time, including black small square price, black small square a desire to have additional benefits or more flexible benefits, black small square dissatisfaction with service, including claims turnaround times and the percentage of claims denied. When presented with the opportunity to shop the market for quotes, the group agent or broker will consider black small square existing coverage, black small square proposed new coverage, black small square appropriate funding mechanisms, black small square appropriate premium payment structure. 8.3.1 Existing coverage. One of the first things that a group agent needs to do is to understand the coverage provided by the existing plan and any shortfalls that it may have in the eyes of the plan sponsor or its members. Evaluation of the existing group coverage relies on three separate elements: black small square and in-depth analysis of the benefits offered, plan design, black small square and evaluation of the group's claims experience, black small square overall level of satisfaction with the current group provider. 8.3.1.1 Existing plan design. The existing plan coverage is the starting point for any review of existing coverage and analysis of needs should the plan sponsor wish to consider other insurers' offerings. Not only the type of coverage, but the nature and scope of coverage, covered conditions, products and services, benefit limits, definitions, deductibles and co-insurance factors, etc., and the type of funding in place for the current plan must be examined. A detailed summary of potential points of comparison is provided under the proposed new coverage section, below. 8.3.1.2 Claims experience. A group's past claims experience is often seen as a strong indicator of likely future claims and, as such, can play a crucial role in both premium pricing and plan design. A group with comparatively high claims can expect to face equally high premiums at plan renewal or when shopping the market for a new carrier. But of equal consideration could be the reason for the high claims rate. It might not simply be that the group members incur more bouts of disability or medical expenses than other, similar groups. In part, the plan design might permit, or even encourage, a high level of claims. Many factors need to be considered and the following questions need to be answered. Black small square. Is the coverage very broad? Black small square. Are the definitions of a covered event, product, or service very liberal? Black small square. Are benefit maximums very high? Black small square. Are there deductibles, co-insurance factors, and waiting periods designed to minimize claims? An unusually high past claims experience might be attributed as much to the plan design as to the plan members, particularly if there are Northwest proactive programs in place, like an EAP. 8.3.1.3 Satisfaction with current group provider. Before determining the criteria for adjusting the current plan or setting up a new plan, the agent must ensure that the services provided by the carrier of the current plan have been satisfactory to date. Important considerations include the level of support offered by the provider in administering the plan and the turnaround time on claims. Any concerns voiced by the plan sponsor or the administrator should be taken into consideration when determining whether or not it would be appropriate to approach a new carrier. 8.3.2 Proposed new coverage. Switching to a new group carrier is not a decision that should be made on price alone. A lower price may be an indication that the new plan is more efficiently designed and managed or that it has some deficiencies when compared to the existing plan. An in-depth examination of the plan design would be warranted to determine whether value or price is the key element to the proposed plan. 8.3.2.1 New plan design. On the surface, a proposed new group plan may offer the same benefits as the plan that the group is seeking to replace: disability benefits, extended health, etc. But are those benefits really the same or merely just similar? Looked at more carefully, they may not really offer the same benefits as the existing plan. To determine true value, both the existing and the proposed new plans must be examined from a variety of perspectives. Black small square disability benefits, white small square definition of disability, white small square waiting period, white small square benefit periods for both short-term disability, STD, and long-term disability, LTD, white small square percentage of income covered under STD and LTD, white small square rehabilitation and retraining services offered, black small square extended health benefits, white small square services covered, white small square maximum benefits, black small square drug benefits, white small square deductibles, white small square coinsurance factors, white small square drugs covered, white small square brand name or generic only, white small square benefits provided on a pay direct or reimbursement basis, black small square vision care, white small square maximum benefits, white small square how often may claims be presented, white small square covered products and services, black small square dental benefits, white small square deductibles, white small square coinsurance factors, white small square covered procedures, white small square maximum annual/lifetime benefits, black small square long-term care, white small square waiting periods, white small square maximum benefits, white small square services covered, black small square critical illness, white small square amount of coverage, white small square covered conditions, white small square definitions of covered conditions, black small square employee assistance plan, EAP, white small square inclusion of an EAP in the insurance plan, white small square benefits provided, white small square maximum benefits. All of these elements have to be taken into consideration in order to determine whether the proposed new plan offers value, not merely a lower price, in comparison to the plan being replaced. 8.3.3 Funding formulas. The funding of a group insurance accident and sickness plan can basically be structured in one of three ways, depending on the services being provided by the insurance company and whether the plan sponsor wants a guaranteed premium structure or one that can vary with claims and costs. Black small square non-refund accounting, black small square refund accounting, black small square administrative services only. 8.3.3.1 Non-refund accounting. The more traditional form of funding a group insurance plan is through the use of a fully insured, pooled plan, non-refund accounting. As with most individual insurance contracts, the insurance company bears the full financial responsibility for paying all claims. The insurance company sets premiums based upon the anticipated cost of claims for the period, which in turn is based on past claims experience. If the actual cost of claims exceeds the anticipated cost, the plan sponsor, usually the employer, has no liability to cover the excess costs. On the other hand, if claims costs for the period are less than were estimated in setting the premiums, the insurance company benefits from a windfall. There is no provision for a refund of premiums to the plan sponsor. However, excess claims over those predicted will be taken into consideration in setting future premium rates, higher, at time of contract renewal. 8.3.3.2 Refund accounting. Refund accounting for group insurance is, in effect, a form of participating insurance from the perspective of the plan sponsor, most often the employer of the group members. Premiums are set prospectively, based on the group's past claims experience. If the claims experience of the group is better than the group premiums were priced for, the employer benefits through a partial refund of its premiums paid. If the actual experience is worse than anticipated, the insurance company has the opportunity to recoup its losses at time of contract renewal. Refund accounting is also referred to as retention accounting. 8.3.3.3 Administrative services only, ASO. An administrative services only, ASO, group plan is one where the insurance company is responsible only for providing an administrative role, not for funding the benefits paid out to claimants. There is no insurance element to the plan. The plan sponsor assumes all of the risk of paying claims. The plan sponsor is comfortable in assuming the costs of funding the plan and does not see the need to pay a third party to assume the risk. However, the plan sponsor, the employer, is unlikely to have either the qualified staff, the time, or the inclination to handle the myriad of administrative functions of running a group plan and so outsources the administration, record-keeping, pricing, adjudicating and paying claims, etc., to an insurance company. ASO plans are most appropriate for large organizations with thousands of employees and substantial assets and cash flow, so as to be able to absorb the cost of claims. 8.3.4 Responsibility for premium payment. Employer/employee plans can be structured either as a contributory plan, with premiums shared between the employer and the employee, or as an employer-pay-all non-contributory plan. Group association plans are typically fully contributory. The premium is fully paid by the member, since there is no incentive for the plan sponsor, for example, the Canadian Medical Association, to pay part of the premium on behalf of the member. The plan is offered strictly as a service. 8.3.4.1 Non-contributory. A non-contributory group insurance plan is one under which all premiums are paid for by the plan sponsor, generally an employer of a group of employees that make up the group members. Under non-contributory group plans, it is usually a requirement that 100% of qualifying employees join the plan, and there is little or no opportunity for the group members to vary their benefits from a set schedule. 8.3.4.2 Contributory. Conversely, a contributory group plan is one under which some, or all, of the premiums are paid for by the group members themselves. Participation in a contributory plan is usually optional, although there will almost always be a requirement that a minimum percentage of qualifying employees must participate in the plan in order to ensure a broad cross-section of risk. Contributory plans often offer the members more freedom in selecting benefits, although certain coverages may be mandatory. 8.4 Costs. The overall costs of group insurance are determined by a confluence of a number of different factors. Black small square premium rates. Black small square taxation and group plan registration. Black small square claims experience and other product cost drivers. These elements are briefly discussed in the following sections. 8.4.1 Premium rates. Group premium rates are affected by a variety of factors, some of which have been addressed earlier in this chapter. Makeup of the group. The number of members in a group has an impact on the ability of the insurer to accurately estimate future claims. In the case of smaller groups, 25 lives or less, claims experience cannot be counted on to resemble actuarial norms, and smaller groups may face comparatively higher premium rates. The average age and gender of the group members also factors significantly in premium pricing, as does the turnover rate. Nature of the business. The level of benefits offered and premium pricing under the group plan depend on the nature of the business, namely the type and level of risk that employees are exposed to. For various types of reasons, different occupations may also have traditionally lower, or higher, claim rates than others, despite their potential similarities. Group benefits offered. Premium pricing is directly linked to the nature and the level of benefits offered, with increased coverage yielding generally higher premiums. However, the increase in premium rates is not always proportional to the increase in coverage. Black small square past claims experience. Even if the group's past claims experience is not always reliable, new or small group, the carrier will want to predict future claim rates in order to determine an appropriate premium. This last factor is addressed differently according to the nature of the group. First-year rates, or renewal rates, can be based, in whole or in part, on past claims experience rated on the claims experience of a pool of plan members in similar situations, pooled or manual rated, or often on a combination of these two methods, blended rating. 8.4.1.1 Manual rating. If a prospective group applying for coverage has had no previous group coverage on which to assess its claims experience, the group premiums will be based exclusively on a rate derived on a manual basis. The manual rating sets out premium standards for groups of a similar size and makeup within the same industry sector, based primarily on their past claims experience. This method is also sometimes referred to as pooled pricing. 8.4.1.2 Experience rating. In the case of a group seeking to renew their coverage, either with the same carrier or a replacement carrier, premiums will largely be based on an estimate of future claims, which is in turn largely based on the past claims experience of the group. It is assumed that, if the group is sufficiently large for past claims experience statistics to be meaningful, and the makeup of the group has not changed in a meaningful way, past claims are a reasonable predictor of future claims and can be used to set premium rates. 8.4.1.3 Blended rating. Unless a prospective group has never had coverage previously, group premium rates are seldom based entirely on either a manual rating or an experience rating basis. They are set based on a blend of rates derived from both rating methods. The degree to which previous claims experience weighs on the pricing process is a function of how credible past claims experience is considered to be. 8.4.1.4 Credibility. Credibility is not a rating method in and of itself. Rather, it is a means of determining how reliable experience rating is in a given case, thereby setting the mix of experience rating and manual rating used in a blended rating situation. In a situation where a large group is highly stable, has a very low employee turnover rate, and has had group coverage in place for a number of years, the group's past claims experience might be considered highly credible, in other words, reliable in predicting future claims rates. On the other hand, smaller groups with higher employee turnover rates and a short history of group coverage would have a much lower credibility rating for past claims experience. Groups with existing coverage will likely have an experience credibility rating somewhere between high and low. Groups with no previous group coverage will have a null experience credibility rating, and premium rates would be based exclusively on a manual rating approach. The Master Mobile Company has a workforce of 37 employees and an annual employee turnover rate of 18%. The company has had a group benefits plan in force for 4 years. Their claims experience credibility has been rated at 40%, meaning that insurance premiums will be based 40% on their previous claims experience and 60% on the standard manual rate for a group of their size in a comparable industry. 8.4.2 Taxation and Group Plan Registration. As for individual plan, Group ANS plans have tax implications that must be considered when determining the overall cost of the coverage for the plan sponsor and the plan members. Of particular interest are the impacts of Black Small Square Employee Payment of Long-Term Disability Premium. Black Small Square Registration of Short-Term Disability Plan with Employment and Social Development Canada, ESDC. Black Small Square Group Premium Tax. 8.4.2.1 Employee Payment of Long-Term Disability Premium. One factor that must be considered in the design of a long-term group disability plan is the tax ramifications of premiums and benefits. In all cases, employer-paid group premiums for disability, extended health, and other forms of group ANS insurance are a tax-deductible expense for the employer, regardless of whether or not they are a taxable benefit for the covered employees. Of particular interest is the tax treatment of disability benefits, depending upon who pays, and pays what portion, of the group premium. If the employer pays 100% of the premium, any disability benefits paid out under the plan will be treated as taxable income in the hands of the recipient group member for the year in which they are received. If the employee/group member pays 100% of the group plan premiums, any benefits paid to him will be tax-free, but the employee does not get to tax deduct the premiums paid. If the employer and employee share the group disability premiums, in the event of a claim, the plan member receives a portion of the benefits equal to his aggregate premiums paid, tax-free, and the balance of the benefits is treated as taxable income. Shauna is a member of the group insurance plan where she works, which provides her with disability benefits of $1,200 a month. Shauna and her employer share the cost of disability premiums 50/50. Since the inception of the plan, each has paid $3,600 in group disability premiums and, until last year, Shauna never had a claim. She was sick last January and was off work for 10 months, receiving $9,600 in disability benefits. Her first $3,600 of benefits, equal to the premiums that she had paid into the plan, were tax-free, while the other $6,000 of benefits was a taxable benefit to Shauna. For this reason, most contributory group plans are structured such that the employee's portion of the group premiums paid by the employee are allocated, first and foremost, to pay the premiums for the long-term disability portion. As their premiums are not tax-deductible, the benefits payable in the event of disability are also non-taxable. 8.4.2.2 Registration of Short-Term Disability Plan with Employment and Social Development Canada, ESDC. ESDC is responsible for, among other duties, administering the Federal Employment Insurance, EI, program. Among the benefits provided to persons eligible for EI is a sickness benefit paid for a maximum of 15 weeks, following a 1-week waiting period. If an employer has short-term group disability coverage in place that is equal to or greater than the coverage provided by EI, the employer can apply for a partial reduction in its EI premiums otherwise payable. This is because EI is a second payer to group insurance coverage. The group short-term disability, STD, benefits would relieve EI of having to pay any disability benefit with respect to that insured. In order to qualify for the reduction, the employer must register the group plan with ESDC based on their specific schedule. 8.4.2.3 Group Premium Tax. Premiums paid for all forms of group accident and sickness and extended health coverage, both personal and business, are subject to the provincial premium tax, generally between 2 and 3% of the net premium payable. The tax is applicable whether the premiums are paid by the insured plan member or an employer. The premium tax is part of the overall premium quoted, rather than being broken out as a separate charge. Jorge pays $150.81 per month for his group long-term disability insurance coverage. The $150.81 monthly charge represents the base premium for the coverage of $147.06 plus a 2.55% premium tax of $3.75, $147.06 times 2.55%. 8.4.3 Claims experience and other product cost drivers. The main driver of premium costs for a group plan is, of course, anticipated claims. But there are specific elements within a plan that can impact the frequency and severity, magnitude, of those claims. The frequency of claims can be modified through the implementation of deductibles and co-insurance factors, both providing amounts that the plan member must pay of the expense being claimed. If the benefits are free to the member, no deductible or co-insurance factor, they are more likely to be claimed, because there is no perceived downside for the user. If the plan member is going to be responsible for at least part of the cost of a claim, he may reconsider whether the product or service being contemplated is really necessary. It is the same concept as imposing user fees in a healthcare system. For disability coverage, extending the waiting period can eliminate all really short-term claims, reducing both benefits paid out and administrative expenses associated with the coverage. For drug benefits, eliminating coverage for brand-name drugs, unusually expensive drugs and non-prescription drugs can all significantly reduce the insurer's exposure to claims. A contributory plan, particularly for benefits for short-term disability, can give rise to higher claims. Plan members may not be so unwell as to have to file, or continue, a disability claim but, if they have paid for the coverage, may feel a sense of entitlement. All these and similar elements must be taken into consideration by the insurer in designing and costing a group plan. 8.5 Claims administration. It is the responsibility of the group insurer to administer claims from first notification to final payment, if any. This is a multi-step process. First, the insurer must receive notification of the claim, usually on an insurer-provided claim form, and any attendant proof of claim, such as a physician's statement. Next, the insurer must check that both the group plan in question is still in force and the claimant is a member of that plan. It must also determine whether the products or services being claimed are covered by the plan. For example, under a drug claim, is the drug a qualified item and is the brand name drug covered or just the generic version? Adjudication of the claim, see Claims Adjudication section, above, is the next, all-important step. If the claim is approved, it is the responsibility of the insurer to make appropriate payment, either in a lump sum or on a periodic basis, as the case may be. With large groups, communication with the group sponsor and the group members would be the responsibility of the representative of the insurer, or representatives of the insurer and the plan sponsor, together. However, in the case of groups with only a few members, 25 or less for example, the agent may be called upon to communicate insurer requirements and processes to the members directly. 8.6 Coordination of benefits. Almost all group insurance plans, particularly those offering accident and sickness or extended health benefits, have a Coordination of Benefits (COB) clause in their master contract. In situations where a claimant is covered by two group plans, perhaps his own and through family coverage via a spouse's plan, which plan pays first and, in effect, for how much of the expense each plan is liable, is determined by the COB rules. The basic rules are fairly straightforward. The group plan covering the claimant as a primary insured is the first payer. Assuming that the first payer does not fully cover the expense, the spouse's plan, under which the claimant is also insured via family coverage, becomes the second payer. The entire expense, not just the portion paid or reimbursed by the first payer, is filed as a claim with the second payer, which then pays the lesser of what it would have paid had it been the first payer. The difference between the total expense and what the first payer paid or reimbursed. In the case of a claim on behalf of expenses incurred by children of the insureds, the insurance company covering the parent with a birth date that is earliest in the calendar year, regardless of age, becomes the first payer. An example might help to clarify these rules about the coordination of benefits. Jasmine and Abdul are a married couple, both working in the computer industry, but each for a different company. Each of them is a member of a group plan that offers benefits to employees and their spouses. The plans are provided by two different insurance companies. Both plans offer dental benefits, including restorative services, like caps and bridges. Jasmine's plan has a $100 annual deductible on dental claims and a $1,500 annual maximum on restorative services. Abdul's plan has a $50 annual deductible on dental claims and a $2,000 annual maximum on restorative services. Last year, Jasmine fell while hiking and damaged her front teeth. The dentist bill for the restorative work was $2,500. It was the first dental claim against either plan for the year. As the patient in question, Jasmine claimed first against her group plan carrier. She was responsible for the first $100 of expenses under the plan's deductible. Of the other $2,400 of expenses, her plan reimbursed her $1,500, the maximum allowable in 1 year for restorative services. That left Jasmine with $1,000 of dental expenses that her group plan did not cover. The couple then submitted the entire $2,500 bill to Abdul's plan as well. If it had been the primary carrier, Abdul's plan would have covered $2,000 of the claim, after allowing for the $50 deductible. Since Abdul's plan, as second payer, is required to cover, under the coordination of benefits rules, the lesser of what it would have paid had it been the primary carrier, $2,000, and the amount of the claim not covered by Jasmine's plan, $1,000, the plan covered $1,000 of the expense. By combining the two plans, Jasmine was fully reimbursed for her dental expenses. 8.7 Agent Service Role. In instances where the agent associated with a group plan is not actively involved in group business, his sole role in the marketing and administration process may be the identification of a group prospect and introducing that prospect to a group representative or the insurance company's group representative, account executive. If the group plan is successfully placed, the agent receives a commission. On the other hand, if the agent/broker is personally actively involved in both sales and service process, he has a two-pronged responsibility. Black small square remaining up to date on the client's needs and situation. Black small square documenting the services provided. If a new or replacement plan is to be initiated, the agent may be directly involved in an education and promotion program, meetings, presentations, written communications, etc., with the employees to encourage participation in the plan. 8.7.1 Ongoing awareness of client situation and needs. Many factors influence the decision to offer group benefits to members, including business growth and retraction, and the changing needs of members. Agents should not only be aware of new offerings from insurance companies, but also be aware of changing circumstances of their clients. Preparing a plan for periodic client contact will serve agents and clients well to strengthen client relationships and foster referrals. This plan will allow the agent to Black small square be a conduit between the client and the insurance company, to anticipate and help to head off any issues of dissatisfaction. Black small square be in contact with the client 90 days prior to the plan's yearly renewal date, to see if any plan modifications are required or if the client wishes to go to market in order to decide whether to renew the current plan or to seek an alternate provider. Black small square to solicit quotes from other providers and make recommendations to the plan provider, if the client wishes to shop the plan. 8.7.2 Documentation of service provided. It is critical that the agent document every step of the service process, for his own protection and the protection of both the client and the insurance company. If the client contacted the agent seeking some level of service, the agent should document the date of the contact and what was discussed, when and if he met with the client and what was said, what action was taken, and when and how the matter was resolved. Similar detail should be recorded if the agent or the insurance company initiated contact. Particular care should be taken to set out the specifics of any instance where the client expressed concerns about the product or service provided by either the agent or the insurance company. Copies of all written communications between the client, the agent, and the insurance company should be retained in the agent's file, including quotes obtained and letters or emails passing between all or any of the parties in regard to the client's situation. Details of phone conversations should also be recorded in writing. All of these records could be vital in ensuring that the client is properly served and in establishing a record in the event there should be a claim or legal dispute involving either the agent or the insurance company in the future.